everyone. Hi. Hello, hello. Um, hey AJ, hi BL, hi Bob, hi Gabriel, hi Galadesh, hi Joash, hi Kent, Mark, Martin, Matej, two Pauls, Raflik, Robin, Stephen, another Stephen, there's another Stephen, there's four Stevens. Hi Stevens and Summit. And there's more of you joining, so we'll wait for the rest of you to join. Hi. Mark from Belgium. Hello, hello, hello. Oh, actually, since we're waiting for the rest to join, I actually want to find out where you guys are from. I always wonder where you guys are from. Summit, I know where you are from. I see you in so many webinars. Slovenia, Australia, Germany, Belgium, Singapore, Philippines, South Africa. Okay, we're an international crowd. India, Netherlands, Adelaide, Australia. Martin's from Adelaide. Never actually been to Adelaide. Oh wait, have I? I'm not sure. Australia. Paul's from Australia. There's a lot. There is 4 Pauls today. 4 Pauls, 4 Stevens. Hello. Oh, I love how all the Stevens have different spelling names. Like it's all pronounced Stephen, but it's all different spelling. Very cool, very cool. Okay, Trinidad and Tobago. Yeah, I remember seeing you this. I remember seeing you in almost all my webinars. So I definitely remember you, Summit. Okay, you guys are really from everywhere. Nice to meet all of you. If I have not already met you before, I'm so glad you guys are in this webinar. Oh, another thing I want to check with you guys. Okay, I'm having pregnancy brain. Okay, so I don't know if it's my memory or like because I do so many webinars, right? So I just want to check with you guys. Didn't we just do Elliott wave? I feel like we just did Elliott wave not too long ago. Maybe like I feel like it could be just last week. Do you guys remember? Okay, we did do. Thanks, Bob. We did no because when I was like going through, I'm just like I remember so clearly that we did Elliott wave, and then I remember so clearly that like Desiree was asking a lot of questions on Elliott wave. She's not here today. Oh wait, Desiree, you are here. Do you guys remember exactly what our topic was last week? Why did we do Elliott wave last week and we're doing it again this week? Let me just check my schedule. Actually, it's very weird. We don't usually repeat topic. You did 1 out of 3. Oh, okay. So today is supposed to be 2 out of 3. Okay, give me a sec, guys. Let me just double check. Is today supposed to be 2 out of 3? Because when I sign in for the webinar, it says 1 out of 3. Just give me a moment. I don't want to like teach you guys stuff you already know because we could be using this hour to be learning other stuff. Where is it? Where are you? Give me a sec, guys. I'm going in to see what the topics says because I remember so clearly just now I saw. Yeah, it says here Elliott wave, part 1 of a part 3, introduction to Elliott wave. This is today's webinar for it's on my webinar schedule. Okay, anyways, we'll just do a recap of it then, doesn't matter. Yeah, we'll just do a recap, don't worry. Okay, for those who were here last week and you're like, oh, we already went through this last week, just take it as a recap because if it's scheduled this way, I need to follow the schedule. unless I saw wrongly, but no, I went to double check. It really does say part 1 or part 3 introduction. So we're just going to quickly do part 1 or part 3. It's basically the same thing we learned last week. Okay, so I'm not going to like cover all the weird stuff that you guys probably don't want to know. Maybe today we can spend a bit more time on the charts, right? Okay, give me a sec. I'm gonna set up my I'm gonna set up my trading view so that we can spend a bit more time on trading view today, since we already did this topic last week. Okay, cool. Okay. Okay, let's start the webinar. Hi, hey Kelvin. Hi. Okay, so we're gonna do Elliott Wave series part 1 or part 3. Last week we did that. We already did this last week. I guess today will just be a recap, right? Okay, we can go we can spend a bit more time on trading view, since last week we kind of covered it. For those who didn't join last week, this will be new information for you, and for those who joined last week, you will kind of be like, oh, we already went through this last week. So it's okay to learn something twice. Okay, so disclaimer, you guys already know whatever I share in this webinar should not be construed as trading advice. You should take this as educational. Nothing I say here is like financial advice or investment advice or any kind of advice that would risk you losing your money. Okay, so please be reminded that trading is a very risky game and it's not for all investors. So please do learn before you jump into the ocean. Other than that, if you guys are already very seasoned to trading, this applies to you too. Okay, because trading can burn everyone. Okay, so agenda for today: introduction to Elliott Wave, impulsive wave, corrective wave, and fractal nature of Elliott Wave. Okay, so introducing your host. I'm gonna go quick since we already covered this topic. This is a good chance for me to show you guys how I would use Elliott Wave. But then again, if I go into trading view to show you guys how to do Elliott Wave, next week when we do part 2 and part 3, you guys will be like, okay, you guys will be like professionals already. Okay, so don't worry about it. We can just spend most of our time practicing. Okay, so for those who don't already know me, my name is Cassandra. You can call me Cass. I am an external analyst and a prop trader at Everest Fortune Group, an award-winning research firm. We do a lot of research, we do a lot of back testing, and we advise brokerages, hedge funds, banks, and financial institutions on where we think the market is going. Okay, so we basically spend a lot of time on the charts, kind of like studying it and understanding where it's going. Other than that, I am a prop trader. For those who don't know what prop trading is, I am a certified prop trader in 2 prop trading firms and in Everest Fortune Group. Okay, so for those who don't know what it takes to be a prop trader, you basically need to do 8 to 10% profit within a month, depending on the company you're with. Okay, 8 to 10% profit within a month for you to pass the test. Once you pass the test, you get funded. So I have been funded multiple times already. I basically specialize in technical analysis. So if you do have any questions regarding technical analysis, just shoot. I'll try my best to answer. If you have questions regarding fundamental analysis, please try your best not to ask me, because chances are I'm gonna not have the answer to it. I am not a fundamental analyst. I'm very bad with fundamental analysis. Okay, I know the basics of it, but I won't be able to properly advise you. Okay, so you wouldn't want to be getting your advice from me anyways when it comes to fundamentals. So only ask me technical analysis. Okay, I purely do technical analysis, like purely. Okay, there's so many times I tried fundamental analysis and I got burned. So I'm just gonna stick with technical analysis. It's the one that makes me profit. Okay, so introduction to Elliott Wave. Elliott Wave principle or Elliott wave theory is a form of technical analysis of that finance traders use to analyze financial market cycles and forecast market trends by identifying extremes in investor psychology and price levels such as highs and lows and looking for patterns in price. So this Ralph Nelson Elliott, an American accountant, developed a model for the underlying social principles for financial markets by studying their price movements and developed a set of analytical tools in the 1930s. So he proposed that the market prices unfolds in specific patterns, and the specific patterns that he notices that keeps repeating itself over and over and over again is that price tends to move in 5 waves. Okay, it can be 5 waves up, it can be 5 waves down, but basically Ralph Nelson Elliott noticed that price is constantly moving in 5 waves, and if you go to the chart you will see the 5 waves as well. Most importantly, you get the basic or like the history of this technical analysis, right? But most importantly is that you need to know how to identify the 5 waves. I mean, it's so easy for me to tell you that if you go to the charts you will see 5 waves, but there's 100 ways you can spot the wrong 5 waves. Okay, so Mr. Elliott, he came up with rules and principles to help you identify the 5 waves correctly. Okay, so the wave principle, he wrote all this in his book, The Theory of the Market Behavior, where they study the theory of the market behavior. In his book, The Wave Principle, in 1938, summarized into series and articles in Financial World magazine in 1939, and covered it most comprehensive in his final major work, The Natures of Law, The Secret of the Universe, in 1946, where he talks about all about Elliott wave. Okay, so Elliott stated that because man is a subject of rhythmical procedure, calculations having to do with his activities can be projected far into the future with a justification and certainty heretofore. Okay, so that means Mr. Elliott thinks that humans are very habitual, and I do agree with him. Okay, so he's saying that this 5 waves keeps happening because humans keep repeating themselves. If you go to the market, you will see that history keeps repeating itself over and over again. I mean, like, I see a lot of regulars here, so I can assume a lot of you have been trading for a while. I'm sure by now you would have heard that history keeps repeating itself on the charts. So you know, every 10 years, historically, a recession will happen every 10 years. Do you guys notice that pattern? So 10 years will come, a recession happens. So the last time a recession was 2008. I think that was the Lehman Brothers, right? Okay, and then now is a decade later. It didn't happen in 2018, but we are in 2023, which is 1 decade later. Okay, or like 1.5 decades later, and now we are at risk of a recession. Okay, do you see how bad inflation is and whatnot? Because humans just keep repeating themselves. It's like we don't learn our lessons or something. I don't know. But to be fair, this time the recession was kind of caused by COVID, which was unforeseen. Okay, it's not. I don't know how human was going to avoid like diseases and stuff. Okay, so every 10 years, it just seems to happen that there's a financial crash. How to use Elliott wave in gold, GBP and USD, EUR USD. We will get to there in a bit. I need to finish the slides first, then we'll go to TradingView and I'll show you guys how to use it. I will show you guys, actually today I wanted to focus on Ethereum because I've been charting Elliott wave on Ethereum. Actually, I spent the last few days charting Elliott wave on Ethereum because on Saturday, I'm sure you guys have heard that Silicon Valley Bank wasn't doing well. So I took all my Ethereum out of, I took all my spot position out. Oh, is it raining? Okay, no. Okay, I took all my spot position out, and then only later on with Elliott wave, I realized that Ethereum is going up. So I will show you guys how Ethereum is going up. Okay, this is exactly why I don't use fundamental analysis, because I saw the news that the bank was going to crash. I took all my Ethereum out, and then I did not make profit by taking my money out, okay, my Ethereum out of the market. Okay, so if you use Elliott wave, you would have seen a long time ago that we are actually in a bullish trend for Ethereum. Okay, same for gold. I think we can try look at gold if we have time later, but I want to stick to Ethereum because I've been charting Ethereum for the last few days. Okay, so basically this is the 5 waves that he's talking about. Okay, let's recap for those who were here last week. For those who are new, this is information. Whatever I just said before this was just, it's good to know. Okay, from whatever I say right now, you need to register this information in your brain if Elliott wave is something you want to use in your trading. Okay, if Elliott wave is something you want to use in your trading, you need to register the information, the following information I'm going to give you. Okay, Elliott wave moves in 5 waves. Okay, Elliott wave moves in 5 waves. Wave 1, wave 3, and wave 5 are impulsive wave. Okay, that means wave 1, wave 3, and wave 5 will follow trend. If price is bullish right now, if we are in an upwards market, wave 1, 3, and 5 will follow that trend. 2 and 4 are called, oh my gosh, my brain just stopped. What are called, okay, 2 and 4 are called corrective waves. Okay, corrective wave means it does a retracement. Okay, it does a retracement, it retraces, and then when it's done with wave 2, it continues with wave 3 with the impulsive wave. It's impulse on the direction of the market. Okay, point number 1 that is very important in this webinar, especially those who are new. For those who were here last week, this is a recap. Okay, 1, 3, 5 is following trend. 2 and 4 are corrective wave. It is just a pullback or a retracement. So as a trader, I only trade wave 1, wave 3, and wave 5. Okay, mostly wave 3 and wave 5, but 1, 3, and 5. Okay, I do not trade wave 2 and wave 4 because these are going against trend. These are waves, these are the pullback. You know how price is always moving in a zigzag? I don't want to play that zigzag, like going, I don't want to go against trend. Okay, so that is information number 1 that is super important. Anything else I say before that is good to know, it's not that important. Okay, so this is Fibonacci. You guys already know this. A lot of you already know this. I wouldn't have time to go into this. Oh, okay, you know what? Last week when we did this webinar, I think we were supposed to focus more on Fibonacci rather than Elliott wave. And this week we are supposed to focus more on Elliott wave rather than Fibonacci. Okay, so Fibonacci is important because you are going to use it to combine it with Elliott wave. Okay, so for those who don't already know Fibonacci, please go into IC Markets YouTube. I'm sure they have videos on Fibonacci. Okay, but today we should not be focusing on Fibonacci because last week we already focused on Fibonacci. This week we should be focusing more on Elliott wave. I think being able to focus to master Elliott wave is truly a skill. Like it took me months to master Elliott wave. So even though we already covered this topic last week, there's no way, unless you are already practicing it, you will be able to identify the 5 waves. Okay, so let's just go on. The impulsive waves. I remember, well, I think it was Desiree who asked me last week what this means. Okay, this does not mean anything. Okay, this is not important. I'm gonna color over this. Okay. Okay. Point number 2 that you need to take away from this webinar. Everything that I said is good to know, not that important. The following information is super, super, super important. Okay. Would you be able to do all time frames, and if so, what time frame would you recommend? Yes, it is applicable to all time frames, and the time frames I would recommend it is the time frame that you would use for your trading style. That means if you are a swing trader, use the bigger time frames like the daily, the weekly. If you're a day trader, you can just stick to the 4 hours, the 1 hour, and if you are a scalper, you can just use anything below the 1 hour. Okay, so 2 things you need to take away from this webinar. Elliott wave moves in 5 waves. 1, 3, and 5 is impulsive wave, and then these are the 3 rules that you need to take away. Okay, you need to just absorb this. This is so important. Okay, these 3 rules are called the golden rules in Elliott wave. So when you come across Elliott wave, there's going to be so many rules, more like guidelines. So guidelines means that you should be following them, but it's not like a must. Okay, but rules means that you must follow them. No matter what, you must follow them. If any time your rule is breached in Elliott wave, it just means that you are on the wrong wave count. Okay, you are on the wrong wave count. So rule number 1, wave 2 cannot retrace more than 100% of wave 1. That means this is wave 1. When wave 2 retraces, it cannot go past the start of wave 1. It needs to end wherever it wants to end, but not below here, and then it should turn back already for wave 3. Okay, rule number 2, wave 3 can never be the shortest of the 3 impulse waves. So 1, 3, and 5, wave 3 can never be the shortest. It doesn't necessarily have to be the longest. It is usually the longest. Wave 3 is usually the longest, but it just cannot be the shortest. Okay, not all the time it's the longest. Most of the time, I would say like 90% of the time, wave 3 is the longest. But even if it's not the longest, it's still okay. It doesn't break the rules as long as it is not the shortest. Can never be the shortest. Okay. Rule number 3, wave 4 can never overlap wave 1. Okay, so let me erase everything. Okay, wave 4, once wave 3 is done and wave 4 pulls back, no matter where it pulls back to, it cannot come to this area where the wave 1 is. Okay, it cannot come to this zone. It cannot touch this. If it touches this, you are on the wrong wave count. Recount your wave. Look for a new wave. Hey, Jamilu, welcome. Elliott wave will always be 5 waves. Yep, that's right. Elliott wave will always be 5 waves. Or he can make 1, 2, 3 and start other Elliott waves. Nope. Oh, hey, best friend. For those who joined my Malay webinar, we've already covered this on the Malay webinar, but if you want, this is just a recap. We literally already did these 3 series. So this is more like reinforcement. Yes. Okay, so wave 4 can never overlap wave 3. If it comes near to wave 1, sorry, wave 4 can never overlap wave 1. If it comes near to wave 1, you are on the wrong wave count. Scrape your whole idea and rechart. Okay, you are on the wrong wave count. Okay, so that's the golden rules. After this, anything I share with you guys is good to know, but the golden rules, you need to register and remember it and write it down somewhere, whatever it is. Okay, but after this, anything I share is just good to know. Okay, so impulse wave, there are different kinds of impulse waves. The first one is called the impulse, which is 1, 2, 3, 4, 5. This is your generic one. Okay, all impulse waves are 5 waves. Okay, all impulse waves are 5 waves. Okay, so this is an impulse. Can you guys let me know, do you want me to go through the guidelines again, or are you guys okay if we just kind of like quickly brush through this so that we can go to TradingView? Can you guys let me know in the chat box, do you want me to go through the guidelines? The thing that I went through was definitely the thing that you must remember in Elliott wave. Other than that, the rest are just guidelines. It's just rules, like guides that you should be following, but it's not like a must. Can you guys let me know in the chat box so I know if I should be continuing with the guidelines or we should just quickly finish the slides and go to TradingView. Oh, I'm new. Okay. For the sake. Okay. Okay. Sorry. Okay. So for the sake of those who are here for the first time, I will just quickly go through the guidelines. Okay. Share the guidelines. Kindly share the guidelines, please. Yes, please. Some of you said go to TradingView. I'm assuming those who want to go to TradingView. was here last week. Okay, so I'll just quickly go through the guidelines, but I won't go into details. I'm just gonna try to finish this entire slides in like the next 10 minutes or 15 minutes. Okay, so why I gave you guys an option on the guidelines is because there are so many guidelines. It's crazy. I mean, the fact that he can write a book on Elliott wave, right? It just shows how many guidelines they are. Therefore, there is no way you will remember those guidelines. Even for me, until today, I've been using Elliott wave for months, okay, for actually coming a year now. Okay, I can't remember a lot of the guidelines. Every time I'm using Elliott wave, I still go and Google the guidelines. So we can go through the guidelines so that you understand the guidelines, but ultimately, don't try to remember it. Anytime you're using Elliott wave, just go on Google, type rules for Elliott wave. So many websites, so many things will come out and tell you the rules on Elliott wave. Okay, so let's just do a quick one. Okay, so impulse wave, substitute of 5 waves. Okay, wave 1, 3, and 5 are impulse wave. We already went through that. Wave 2 can't retrace more than beginning of wave 1. We already went through that. Wave 3 cannot be the shortest wave. Wave 4 cannot overlap. Okay, so this is one of the guidelines. Wave 2 is usually, not all the time, but usually 50% to 88.6% of wave 1. So if this is 0 and this is 100, for example, okay, this is dollars. Okay, I don't know what. Okay, let's say this is the start. Okay, it is usually 50%. So if it usually retraces 50%, means it will usually retrace to half. Okay, 50% to 88.6%. Okay, 88.6%. Okay, so these are the guides. It's not a rule, but it's a guide. Okay, wave 3 is usually 161.8 to 323.6 of wave 1 to 2. Okay, so I'm going to erase everything. Okay, so wave 3 is usually 101.618 to very extreme cases. Okay, this is very, very extreme cases. This is like an overextension, over projection. 3.236 of one wave 1. Okay, so therefore wave 3 is usually longer than wave 1. Remember, these are guides, these are not rules. Therefore, there are times that wave 3 can be shorter than wave 1. Remember, the rule is that as long as wave 3 is not the shortest, most of the time it is the longest. Usually this is the numbers. Okay, okay, and wave 4 is usually 23.6. Wave 4 is usually 23.6% to 38.2% of wave 3. Okay, of wave 3. That means whatever length this is, wave 4, which is the retracement wave, okay, the corrective wave, is usually 23.6% to 38.2%, but it is unusual. It is unusual that it reaches 50%. Okay, so therefore it is usually less than 50%. That means wave 2 usually retraces 50% and above. Wave 4 only retraces below 50%. So when you see a wave 1, wave 2, wave 3, you always see wave 4 being kind of like a very short one, and then wave 5. Okay, sometimes wave 2 can be very long, as long as it doesn't pass the beginning phase. Okay, cool, that's the guides. There's 3 ways to measure wave 5. The first way is that it is 123 to 161 retracement of wave 4. That means whatever wave 4 is, you times it by 1.23 to 1.618. Okay. Secondly, wave 5 equals to wave 1. This is the most common one. Based on my own trading, I notice that every time the length of wave 1, okay, let's say here's 0, here's 100, so price move $100 or 100 points, whatever it is, I notice that wave 5 usually is the same length as wave 1, okay? And the third way is that wave 5 is 61.8% of wave 1 to wave 3. Okay, so these are the guides. These are the guides for Elliott wave. Okay, these are just the guides. So this will be good for trending markets and not ranging markets. Yes, this is for trending markets and not ranging markets. Whenever you see a ranging market, you know that in Elliott wave, that is actually in a corrective wave, which we will go through in a while. Okay, so impulse with extension, meaning that there's always going to be one wave that is super long. It's either wave 1, wave 3, or wave 5. Okay, but the rule is wave 3 cannot be the shortest wave. That's all that it is. Wave 3 cannot be the shortest wave. Impulse with extension means of the 1, 3, and 5, one of it is going to be the longest. Okay, this is very like just a very generic guide. Okay, on let me erase this. Okay, leading diagonal kind of looks like this, 1, 2, 3, 4, 5. It's just different shapes. Basically, leading diagonal and ending diagonal, just different looking shapes of your 5 waves. But most importantly, again, these are good to know, but most importantly, you need to identify your 5 waves based on the 3 golden rules. Okay, so there's not really much guide for this. It's just more like an explanation of what the wave looks like. Okay, so I'm going to continue corrective patterns. Okay, so this is one of corrective patterns. Okay, guys, I don't want to spend too much time on corrective patterns today. Why? Because I personally, we can go through it. I can just quickly brush through it, right? I personally do not trade corrective patterns, and I do not recommend people to trade corrective patterns. Why? Okay, because price move in 5 waves. 1, 2, 3, 4, 5. Within wave 1, there is 5 waves. 1, 2, 3, 4, 5. Within wave 3, there's 5 waves. 1, 2, 3, 4, 5. Within wave 5, there's 5 waves. 1, 2, 3, 4, 5. Okay, so 1, 3, and 5 always has 5 waves inside. Wave 2 and wave 4, okay, until today I haven't gone and found out the answer, have so many variation of what it can look like. It is quite scary. It can be A, B, C. Okay, within wave 2 and 4, it can be A, B, C. It can be A, B, C, A, B, C, A, B, C. It can be W, X, Y, Z, I think. Okay, if I'm not thinking, there's 50 plus variations of what wave 2 and wave 4 can look like. So therefore, I never recommend people trading wave 2 and wave 4, because you trying to spot the variations, your chances of getting it wrong is super, super, super high. The whole point of getting correct trades and being profitable in trading is to look for high probability trades. So therefore, if you are using a technique that has such low probability and so many variations, you are not doing yourself a favor, because there's so many possibilities of what could happen. Okay. Okay, so these are basically what it could look like. It can look like A, B, C. It is called zigzag pattern. It can look like A, B, C, like this, A, B, C. So within wave 2 or 4, this is what it could look like, A, B, C. And then you see it says 3, 3, 5, right? Because within those ABCs, they could be 1, 2, 3, 1, 2, 3, and then 1, 2, 3, 4, 5. 1, 2, 3, 1, 2, 3, and 1, 2, 3, 4, 5. There can be so many sub waves within corrective waves. Therefore, how do you know when wave 2 has ended? Okay, based on the guidelines that we went through just now, I think I should have included a picture. Would have been much easier. I think I had a picture last week, right, with like the numbers. Okay, so good question. How do you know wave 2 has ended? Remember I said just now, wave 1, wave 2, wave 3, wave 4, wave 5. Usually wave 2 goes 50% and above. So it can end anywhere from 50% to 88.6%. The magic number I think is 50 to 61.8. Very rare cases I see 88.6, but usually when you see it reaching this range, you know that it's about to end. So when you see it, then you see like this curve, you see like the turning point, you know that's the start of wave 3 already. Okay. Okay, so remember when I said if you see a ranging market, chances are you are in an Elliott wave, wave 2 and wave 3, because this is another variation. A triangle. Triangle is actually Elliott wave, wave 2 and wave 4. Wave 2 or wave 4. Okay, so wave 2 or wave 4, a triangle, price ranges within the triangle, and then it breaks out and continue with wave 3 and wave 5. Okay, so wave 3 and wave 5 usually follows after a triangle. So if it was ranging up before this and then it came a triangle, usually it will continue up because it's a continuation of wave 3 and wave 5. Okay, so fractal nature. Yes, I only included a few examples of what the corrective wave would look like because there's so many examples of how a corrective wave should look like. I really think you should just skip this when you are trading. Fractal nature of Elliott wave. Okay, fractal nature of Elliott wave. Within waves, there are sub-waves. Okay, within waves, there are sub-waves. Okay, so wave 1 would have 5 waves inside it. Within wave 3, there's 5 waves. Within wave 5, there's 5 waves. 2 and 4 can have so many variation of how many waves can be. It can be 3, it can be 9, it can be, there's so many variation. Okay, so these are the subwaves. The bottom part, don't look at it because these are the subwaves of the subwaves of the subwaves. Okay, so I'm going to go into trading view now. This is the end of our slide. I'm going to go into trading view now and I'll show you how to apply Elliott wave so that you can understand and absorb everything that we have kind of learned. Because you can learn all you want, you can read all the history about something all you want. If you don't know how to apply it, at the end of the day, it's the equivalent of not even learning it. Okay, so where is my... Okay, I accidentally closed my trading view page. Let me just open it. It's going to be very quick. This is not my trading view. I do not know who has their trading view logged in on my computer. Okay, give me a sec, guys. Okay, this is my trading view. This is a free account. I just signed up with my Gmail. Okay, that's why I love trading view. Okay, let's get rid of this. Let's start with Ethereum because I've been chatting Ethereum for the last few days. Let's give me a sec. Need to see my question box. Okay, everyone can see my trading view, right? Can everyone see my trading view? Can you double confirm so that I know we're not all looking at a empty dark screen? Okay, yeah, thanks Martin, thanks Mark, Kelvin, Rafik, Jamilu. Okay, thanks David, thanks best friend. Okay, cool. So I'm going to show you how I've been charting Elliott wave on Ethereum the last few days. Okay, that's why my consensus are that Ethereum is going up. Okay, so remember I'm starting on the weekly, okay? Because I'm going to show you how you're going to use Elliott wave from the big time frame, go down to the small time frame, look for subwaves. In the small time frame, look for subwaves and subwaves and subwaves, okay, to double confirm. Okay, so get out of here. Get out of here. Elliott wave, how you chart it? 1, 2, 3, 4, 5, 6. Number 6, under patterns, click on patterns. You will see Elliott impulse wave. Click on this, the one that has 1, 2, 3, 4, 5. Now you identify your Elliott wave. You identify the 5 waves that Mr. Elliott says that always happens on the chart over and over again. So this for me is wave number 1. This is wave number 2. This is wave number 3. This is wave number 4. And this is wave number 5. Okay, based on my analysis, we have finished 5 waves up. Okay, and then look, there are many corrective patterns. Okay, there's ABC, there's ABC, ABC, ABC. There's many corrective patterns. There's ABCDE even. Okay, but the one that is the most common corrective pattern is actually ABC. So I'm gonna draw the ABC. Okay, so A starts here, A, B, C. So based on my analysis and my Elliott wave, I'm going to change colors so that we know that it's corrective. Blue means corrective, red means impulsive. Okay, based on that, we are now in wave 1, 2, we're going to do a wave 3, 4, 5. Okay, this is what I think Ethereum is going to look like. Okay, so how do I confirm that I found the correct waves? How do I confirm that I found the correct waves? Remember the 3 golden rules. The 3, C should be in wave 5. I can't see why C should be in wave 5. Actually, because if anything, C should be wave 2 or 4. Even if my Elliott wave drawing was wrong, let's say I was wrong and this is not 1, 2, 3, 4, 5. Maybe this whole thing is 1. Okay, or this is 2, whatever it is. Okay, C that is going down is retracing. So it should be a corrective wave in 5 waves. Okay, no. C should not be in 5 waves. Remember, I said only wave 1, 3, and 5 is in. So basically, what I'm trying to say is that on a bigger time frame, this is wave 1. This is wave 2. We are now in wave 3. Okay. Wave 4 and wave 5. Okay, so C should not have 5 waves because 1, 3, and 5, only wave 1, 3, and 5 has 5 subwaves. Only 1, 3, and 5 has 5 subwaves. When you draw 5 waves, 1, 2, 3, 4, and 5, within wave 1, there is 5 waves up. 3, 4, 5. Within wave 3, there's 5 waves up. Within wave 5, there is 5 waves up. 1, 2, 3, 4, 5. Okay, but within wave 2 and wave 4, there can be many, many variations of how many waves there is. I thought C in an ABC corrective has 5 waves. Not necessarily. That's why C itself, like that's why wave 2 and wave 3 has so many variation that you're right, it can have 5 waves in it. So that's a good thing that you pointed out because it was in our slide just now. I thought C in an ABC corrective has 5 waves. You're right, sometimes within the C alone there is 5 waves, okay? But because there's so many variations for wave 2 and wave 3, you don't even know which variation is correct. That's why I said only to focus on wave 1, 3, and 5, because wave 1, 3, and 5 for sure, no matter what, there's 5 waves. But when you look at wave 2 and wave 4, when you look at wave 2 and you look at wave 4, it can be anything. Actually, why don't we just Google and see how many waves variation. Corrective waves, sorry. There is so many. How many corrective waves are there? 5 wave to understand. Okay, I can't even find like a very exact question, but from my understanding, wave 2 and wave 4 has so many variations. That's why there's no way to say that inside wave 3 there is 5 waves. That is one possibility out of the many variations that is available for wave 2 and wave 4. Wave 1, 3, and 5 for sure only has 5 waves in it. Okay, that's why don't even focus too much on wave 2 and 4. Don't even bother trying to trick wave 2 and 4 because chances of you getting the variation wrong is very high. Okay, it is very high to get the variation wrong. Okay, so I hope that answers your question. That yes, wave C could have 5 waves, but not necessarily. That is just one possibility of many possibilities. Okay, so back to Elliott wave. How do I know my first 5 wave was correct to begin with? Okay, remember the 3 golden rules. The 3 golden rules. Wave 2 cannot go beyond wave 1. So if we look at wave 2, okay, we pull out Elliott wave. Pull out Fibonacci. From the swing low, we pull it to the swing high. We can see how low did wave 2 go. The lowest it usually goes is 88.6. Did it go 88.6? Yes, it went even lower than 88.6. Okay, but remember those are just guides. More importantly is that wave 2 cannot pass the starting point of wave 1. Okay, wave 2 cannot pass. Actually, this is I think this is lower. Yeah, wave 2 cannot pass the starting point of wave 1. So based on the 3 golden rule, we did not break the rule, and therefore wave 1, wave 2 is still valid. Okay, wave 3, wave 4, and wave 5. Okay, so wave 4, remember the rule. The second golden rule for wave 4 is that wave 4 cannot overlap wave 1. So if I put my mouse here, wave 4, okay, did not overlap wave 1. Therefore, it did not break the rules, and this wave is still correct. This wave count is still correct. The third rule is that wave 3 cannot be the shortest wave. So if we measure, okay, if we measure wave 1, okay, wave 3, and wave 5, okay, we can immediately see that wave 3 is not the shortest. In fact, it is the longest. Okay, in fact, it's the longest wave. Okay, so based on the 3 golden rules, we did not break any of the rules. Okay, so this is a valid 5 waves count. After 5 waves, if this is the valid 5 waves count, it just means that on a monthly time frame, this 5 waves is actually our wave 1. Okay, this 5 waves is actually our wave 1. It did the wave 2. I think it's gonna start with wave 3. Okay, wave 4 and wave 5. But because this is a monthly, by the time you get there, it's already like, I don't know, by the time you get there, it's like a 10 years from now. Okay, so we'll go weekly and then we'll work down the charts. Okay, is everyone okay? Is anyone not following? Do you need me to repeat anything? Okay, cool. Okay, cool. So, Elliott wave. I think we are in wave 5. 5 waves is done. After that, it's ABC. A, B, and C completed. Okay, so on a bigger scale, this is wave 1. This is wave 2. Now we're going into wave 3. So we're starting wave 3 of wave 3. How do you know low of wave 2 is in? Low of wave 2 is in. You mean on the monthly time frame? You mean this? You mean this? How do I know that it's in? Okay, very good question, Martin. You're right. If you go on the monthly, it doesn't look like it's in yet, but everything in trading is just based on probability. Okay, so based on probability, remember the guide that we had just now? That's a very good question, actually. Wave 2 usually retraces 50% of wave 1, 50, 61, 78, and 88.6. Okay, these are the levels that it usually retraces to. Sorry, I think the number is 88.7 actually. Okay, these are the numbers that usually. So based on this is wave 1. Wave 2, based on the guidelines, okay, will fall into this box here. It will fall into this box, and then from here, it will reverse. Okay, so based on that rule, wave 2 actually hit 78.6. It already satisfied our guideline requirement, and now it is ready to go up. So based on probability, chances are wave 2 is complete. I cannot 100% confirm that wave 2 is complete, but nothing in trading is confirmed. Nothing in trading is 100%. So just based on probability, wave 2 is complete, and now we are starting wave 3. Okay, we are starting wave 3. There is a possibility. That's a very good question, actually. That's really a very good question. There is really a possibility that maybe wave 2 is not complete. Maybe it wants to go lower. But chances are it's complete already. Why do I say that it's complete? Because on the smaller time frame, on the weekly, we can already kind of see reversal. We kind of see some strength trying to push it up already. If this successfully pushes, higher than this area, or maybe this area, I will be quite confident that we are in wave 3 already. Okay, but if the bullish momentum doesn't continue and from here it drops, it means that wave 2 has not ended and we are still in wave 2. That's why Elliott wave can make you a lot of profit, but there is a very high chance you are not in the correct wave count. Okay, if you are in the correct wave count, you're going to make a lot of profit. I remember sharing with you guys last week that I took 10 trades and I got 9 trades correct. 9 out of 10 trades I got correct. I was correct on the dot, correct, over and over and again, because I so happen to be on the correct wave count. So if right now I enter here for a buy and my stop loss get hit, it just means that Martin is right. There's a possibility that wave 2 has not ended, and we're actually wave 2 wants to go a bit lower before it starts with wave 3. So there is no way to 100% confirm, but based on probability, I think it looks like wave 2 has completed and we can start with wave 3, especially because bullishness has started, because price was moving down. There was a downwards trend here. Price was moving in a downtrend. It broke the uptrend. It's giving me confidence that there's a possibility the uptrend has started and wave 3 has started. Okay, so in the event that wave 3 has started, okay, we should start charting for wave 3. Okay, so if wave 3 has started, this could be, that's why there's so many possibilities for Elliott wave. There's so many possibility of Elliott wave. Okay, just based on this, a lot of traders will think this is wave 1, wave 2, now we're in wave 3, wave 4, wave 4 and 5. Wave 3, wave 4 and 5. Okay, some people will think this, but actually I personally think those people are correct, but this is actually wave 1. I'm thinking we are still in wave 1. Wave 1 has not completed because because remember, wave 3 needs to be the longest wave. Wave 3 can never be the shortest wave, and it's usually the longer wave. So if this is the length of wave 1, okay, if this is the length of wave 1, this is wave 1. Wave 3, if this is the end of wave 2 and now we're starting in wave 3, wave 3 needs to go way higher than this. Okay, remember the guide says wave 3 is usually 1.618 times of wave 1. 1.618 times of this should be something like this. I don't know. I'm just randomly assuming this is 1.618. Okay, so this we should be in wave 1 now, and then there's going to be wave 2, wave 3, can expect very long wave 3, wave 4, and then wave 5. Okay, that is possibility number 1. If wave 2 haven't ended, that means this entire thing, wave 2 hasn't ended. We go back to the monthly time frame. Where's the monthly time frame? Okay, then wave 2 should start somewhere around here. Then we're not even in wave 3 yet. Okay, so that's why there's so many. Last price action does not look impulsive. Yeah, you're right. It does not look very impulsive, but it's giving us hints that there's a possibility that it's the wave 3 has started. There is a possibility. It's not confirmed, but there's a possibility it started because number 1 of the trend breakout, the downtrend broken out. That is our first sign of possible trend reversal. Okay, that's number 1. Actually, if you pulled out other things that shows trend, the other things is already showing that it's a trend reversal. Okay, so like let's pull out ADX actually. Sorry, DMI. If we use a directional movement index on the smaller time frame, it's actually already showing, maybe on the weekly, it's still this. Okay. If you not use DMI, here price was trending and the blue line just crossed the red, which gave us sign that there's a possibility trend has reversed. Okay, so that's why there's a possibility we're in wave 3. I think chances are we are in wave 3. I'm a bit more confident that we are wave 3 and that rather than wave 2 completing. Also because in wave 2, the ABC, usually wave A is the same length as wave C. So based on that guideline, okay, based on that guideline, wave A is the same length of wave C. Based on the guideline that A equals to C, actually ABC has completed. So now there's 2 reasons for me to believe that wave 3 has started, because wave 2 has satisfied its ABC, and furthermore, there was a trend line breakup. Okay, that's why in trading is just collecting data and then making a decision on whether which side you're more biased to. I would say I'm 60% biased that wave 3 has started, and maybe 40% that price will go lower, right? I think I'm more biased that it's going up. Furthermore, although I'm not someone who likes to trade fundamentals, okay, I think it was yesterday or was it the day before, Binance has pumped a lot of their funds into Ethereum. Okay, I think it was yesterday or the day before when the government came in to save the bank. Binance actually liquidated a lot of their funds and pumped it into Ethereum, giving me more confidence that maybe it's time. This is the bottom for wave 2 and wave 3 has started. Okay, there's no way to exactly, the screen doesn't appear. Is that for everyone or is that just for George? Okay. I think it's just your screen, George, because it seems to be working for Andy. Okay, anyways, guys, that's all I have time for you guys on Elliott Wave. I just want you to know that Elliott Wave is something that can help you get a lot of profitable trades, but just that it's very time consuming, and there's a very high chance, okay, not a very high chance, like there is a chance you will be on the wrong wave count. Okay, so like what Martin has pointed out, there's a lot of variables, right? There's a lot of variables. If you go on the monthly, it looks like wave 3 hasn't even started, right? So there is a chance that I think that we're in a wave 3, but actually we're still in the wave 2. So that's the thing about Elliott Wave. If you are on the correct wave count, you're going to make a lot of profit. Okay, if you are not on the correct wave count, you're just going to hit your stop loss. But that's just it. Okay, but if you hit your stop loss, it just means you're not on the correct wave count. So usually if, let's, for example, I think this is the end of wave 2, I enter here for a buy. I put my stop loss here. If it hits my stop loss, it is just affirmation to me that, oh, okay, I'm not on the correct wave count. Maybe the correct price wants to go lower, and actually the correct entry was here. Okay, so that's how you can use Elliott Wave to look for trades. I will see you guys next week. We're going to do part 2 of Elliott Wave. Part 2 of Elliott Wave is kind of going through more of the principles. So I'm going to go through my slides and kind of shorten the slides so that we can spend, I want to spend like half an hour on the slides and half an hour on the charts, because we can learn all the history about Elliott Wave we can read all the books, but if you don't know how to apply it on the charts and you don't know how to draw it on the charts, it's really the equivalent of not learning this indicator, because a lot of Elliott Wave has to do with practice and being able to chart it on your chart, right? Because a lot of people, like we can have 10 people coming on the chart, all 10 people will draw 5 different waves. Okay, we're not all going to draw these 5 same waves that I drew here. Okay, I drew 1, 2, 3, 4, 5 here. If 10 people came to this chart, maybe some people will think, oh, this is the end of wave 1. This is wave 2. This is wave 3. This is wave 4. I don't know. Okay, but my point is everyone is going to chart it differently. That's why practice makes perfect. Okay, so I'll catch you guys. No worries, Martin. No worries, Calvin. Thanks, Joash. Thanks, Brian. Is it recorded this webinar? Because the screen is still blank. I cannot see anything. It is recorded. They will probably post it on Facebook. Sorry, not Facebook. YouTube. You can go and retrieve it on YouTube. I will catch you guys next week for Best Friend. I'll see you tomorrow in our Bahasa webinar. Okay? Bye, everyone. Thanks. Thanks, everyone. Thanks, Jamilu. Thanks, David. Thanks, Paul. Thanks, Brandon, Nor, Bob. I'll catch you guys next week. Bye.